Welcome to the market update with Scott Cook. Today is Sunday, April 30th, 2023. And let's start with what happened on Friday. Stocks gained again despite opening moderately lower. The Dow, S&P, and Nasdaq Composite initially slumped in response to Amazon's miss on their earnings before the market turned around and rallied off the morning lows. The Dow closed out the month 2%, 2.1% to be exact, higher, making April its best month since January. Now, January, the Dow was up 2.8%. Dow shares led the market over the last few weeks as bank stocks recovered from the Silicon Valley Bank meltdown. So as of Friday, the market is about halfway through earnings season, and results have been better than expected. Roughly 80% of the S&P 500 companies have surpassed estimates so far. The market really should follow earnings. That being the case, Amazon's disappointment on Thursday could have a little bit of a negative effect. Now, Amazon actually beat earnings per share and revenue estimates. So you'd think that's really good, right? That actually gave us a temporary 12% rally after hours. If you're watching Amazon, it was up nicely. However, that quickly evaporated once the company revealed that its cloud business, Amazon Web Services, decelerated significantly last quarter. As expected, customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions in the first quarter, said Amazon's Chief Financial Officer, Brian Olsavsky. We are seeing these optimizations continue into the second quarter with April revenue growth rates about 500 basis points lower than what we saw in quarter one. This actually cast a pall on the broader market as cloud service growth has become a popular economic barometer in recent years. The most hawkish thing that we saw on Friday's report was the U.S. cyclical core PCE inflation, which tracks inflation related to the current economic cycle. Now, cyclical core PCE soared, rising to 7.88% year over year in March, after screaming higher since early 2021. Meta, formerly Facebook, shares surged almost 14% in response to its major earnings beat. The company surpassed estimates easily at 2.64 earnings per share versus the 1.96 that was expected, while providing optimistic forward guidance as well. So basically, big tech earnings have impressed so far, really kind of alleviating some of the fears among analysts. The market's been waiting, kind of watching big tech, and across the board, big tech hasn't disappointed. And the market's needed that. The common theme is that tech is stronger than most people think. Maybe we're fading just a bit, but things are a lot better than what the bears have been expecting. You know, April is a pretty good bullish month in the market, especially in an election year. 10 out of the last 11 Aprils in an election year have gone up on average about 3.5%. So 10 out of the last 11 were good Aprils, but there's a little saying in the market, sell in May and go away. We'll see what happens. Now, the Federal Reserve policymakers are going to gather for the two-day meeting of the Federal Open Market Committee, FOMC, and this starts on Tuesday with an expected rate decision by Wednesday. And this should be the Fed's final rate hike of the current tightening cycle. The market's focus is going to really shift back to rates with the May FOMC approaching. This is May 3rd. The current hiking cycle is likely to come to a close with a 25 basis point hike on Wednesday, May 3rd. As usual, Powell's post-hike press conference will be more important than the hike itself. Until then, however, don't be too surprised if markets tick a little bit higher prior to another reversal following the rate increase. Here is a quick look at some of the asset classes year-to-date total return. And as you can see that Bitcoin has actually had a pretty strong year so far. I've been keeping an eye on GBTC. That is the trust fund that follows Bitcoin. They're currently in a lawsuit with the SEC because they want to become an ETF. Now, if they become an ETF, right now they're currently trading at about a 40% discount to their net asset value, their actual holdings in Bitcoin. And if they do become an ETF, that 40% gap could be closed right away. So GBTC is one that I've been keeping a close eye on just for the fact that they might, and it's looking pretty good for them, win that lawsuit. That's a 40% rise right there. And then, of course, if Bitcoin continues doing well, they're going to do as well. They're going to do well as well. They're going to do well as well. Follow? They will do well also. So gold is up 8.7%. Stock so far 6.9%. Not so bad for the year considering what happened in 2022. Corporate bonds, government bonds. You can see investment grade bonds. The dollar is struggling just a little. Commodity and oil are both down also. Let's quickly look at the QQQ. I like to use this as kind of a leading indicator for the rest of the market. And you'll notice right here that we've kind of hit a, right here, this line that I've just drawn on the chart, a little bit of resistance. However, did we break through that on Friday? We've had 2 very strong days. Now also, old resistance becomes new support. So we can put that line right about here. Let's just go ahead and draw that horizontal line right here. So a little bit of a channel. Looks like we could potentially be breaking out to the upside of that channel, but there's no strong conviction with the volume. So it'll be interesting to see. Plus, everything hinges on what the FOMC, what we hear on Wednesday with the rate hikes and what is said. So one thing I do want to focus on and take a quick look at is earnings. Who is coming up next week? Let's go ahead and let's go into the calendar. So just go to find and then calendar. And on the far left menu, just make sure we're looking at the right dates here. So on Monday, really nothing big that I'm following on Monday. Norwegian Cruise Lines, it's a stock that I do tend to trade, but this is where it gets interesting. On Tuesday, we've got a couple ones that I'm actually following. As you go down the list, AMD, big tech company, that should have some impact on the market. If you go down this list here, you'll see that Ford has their earnings. And by the way, over here on the right, if you hover your cursor over this, the A means after the market closes. So going back to AMD, after the market closes, go down the list a little bit further, and we have Pfizer right down here. Pfizer is going to be a big one before the market opens. So I think that should maybe set the tone for Tuesday. And then going to Wednesday. Remember, the big thing is what the FOMC says on Wednesday. But Wednesday, really not a whole lot as far as earnings go. Nothing major that I'm keeping an eye on. Now, if there's something that you follow, like Phillips 66, ConocoPhillips is going to actually have their earnings on Thursday. So we're going to take a look at who's coming out, because Thursday is going to be the big earnings announcement day in the market. In fact, let's just go into that one. And you'll see that Apple, after the market closes on Thursday, that's going to be a big one. Let's go down and ConocoPhillips before the market opens on Thursday. So keep an eye on some of these bigger companies that are going to have an impact on the rest of the market. We're again halfway through that earnings season. So this should cause a stir in the market. Again, not too surprised to see the market maybe kind of hold its ground, maybe tick up slightly. We had some good, good Thursday and Friday. However, it all depends on what the Fed says on Wednesday. So be cautious, tighten up those stop losses, lock in some gains if you have them. Good luck.